Intro. Today we're looking at a move that sits at the crossroads of Wall Street and Web3, Forward Industries. A Nasdaq-listed company has announced plans to tokenize its shares on the Solana blockchain. That simple decision could reshape how some investors access and use equity, especially inside decentralized finance. What Forward Industries is doing, rather than just issuing more traditional shares or listing elsewhere. Forward Industries intends to create blockchain-native tokens that represent its Nasdaq shares. Those tokens can then circulate inside Solana's ecosystem, letting shareholders use them in ways a regular stock certificate can't. For example, as collateral in DeFi protocols. Why tokenize shares? Tokenization breaks shares into smaller, tradable digital units and attaches them to a blockchain record. That makes fractional ownership easier, lowers barriers for smaller investors, and can speed up settlement and transfer compared with some legacy systems. For shareholders, tokenization can mean greater liquidity and new ways to interact with the value of their holdings. Why Solana? Forward chose Solana for reasons many in DeFi cite: fast transaction speeds and low fees. Those attributes matter when you want a smooth experience moving tokens, taking out loans, or interacting with multiple smart contracts. Solana's throughput makes it practical for everyday financing activities that might otherwise be slowed or made costly on more congested networks. Using tokenized shares in DeFi, the immediate practical use here is collateralization. Tokenized Forward Industries shares could be pledged within Solana-based lending markets to borrow other assets or stablecoins. That creates a bridge between equity value and decentralized credit. Shareholders gain new financial flexibility without selling their positions. What this means for traditional markets. This initiative highlights a broader trend. Blockchain can provide alternative rails for buying, selling, and leveraging equity. If more issuers follow suit, some market participants could shift parts of their trading and financing activity off traditional exchanges and into tokenized, permissionless environments. That doesn't replace regulated markets overnight, but it adds parallel options that emphasize accessibility and efficiency. Forward's role in tokenization. By moving its shares onto Solana, Forward Industries positions itself as an early adopter among public companies experimenting with digital native securities. The move signals a willingness to blend conventional corporate finance with emerging crypto infrastructure, and it could encourage other issuers to explore similar models. Looking ahead, the rollout will be worth watching. How custodial controls, regulatory compliance, and investor protections are handled will determine whether tokenized shares become a mainstream tool or remain a niche offering. If executed carefully, the experiment could open new avenues for capital access and create useful synergies between traditional equity and DeFi lending. Closing. Forward Industries' plan to tokenize Nasdaq shares on Solana is a clear example of finance evolving at the intersection of two worlds. Whether you see it as innovation or disruption, it's another sign that the ways we own and leverage assets are changing, and that change is only getting started.